Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about Euro NZD because at the moment we have quite interesting price action and structure, first from a technical and then from an order flow perspective. Now, starting here on the monthly, what we can see is that at the moment the market is bounded inside of this channel. In fact, we can see how starting from here, the market created the lower end of this channel, and starting from here, the market created the higher end of this channel. Now, the last time that the market tested the channel itself, it was with this touch here. The market immediately rejected its zone to the upside. We can also notice how this zone was also the previous monthly support, which is now again support here. And as we tested the support, we immediately started rejecting it to the upside, meaning that from a monthly perspective, we could expect more potential bullish continuation. Dropping down on the weekly, what do we see? Now here on the weekly, we can see how we had a very strong move to the downside. Then we had this deceleration, after which we expected a rejection higher. This is also in accumulation zone. The market, in fact, accumulated inside of here. From an institutional perspective, we saw a lot of buying inside of this area, and the market has now created a rejection to the upside, which is what we wanted to see. We can also notice how we have now created this candle here. When you see a candle like this with a very long wick and a green body, what you usually expect is for the next candle to fill in this wick. So here on the weekly as well, we could expect more potential bullish continuation. Dropping down on the daily, what do we see? Now here on the daily, we can see a nice impulse to the upside followed by this correction. Now, generally speaking, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci on the impulse leg itself. Now, in this case, the impulse leg would be from this low to this high. So if we take our Fibonacci from the low to this high, we can see how at the moment we have reached the zone which is in between the 0.32 and 50% Fibonacci retracements taken on this impulse. Now the zone in between the 0.32 and 50% is a very strong support area that we could expect the market to potentially reject to the upside, filling in the wick that we have already identified on the weekly time frame, basically this candle here. In fact, if you're asking yourself, but why when you see a candle like this, you expect the next one to fill in the wick? Because if on the weekly you see a candle like this, most likely on the lower time frames, so for example on the daily, as we have just seen, you will have an impulse in a correction, in which the correction is exactly the wick that you see on the weekly. And after an impulse and correction, you expect a continuation. And the continuation, from a daily perspective, completing the impulse correction and impulse pattern to the upside, is exactly what fills in the wick that you have on the weekly time frame. Now, if we go back on the daily, what we can see is that at the moment we still don't have any deceleration in approaching this zone. In fact, we still have very strong selling pressure. So if we go and see what we have from a commitment of traders perspective, so COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can quickly notice how net positions have been decreasing. We went from a positive to a negative net positioning, and that is clearly reflected in the price action, with euro starting to lose its strength. And if we go and see what we have on the NZD, we can see, however, on the NZD how we went from having a positive to now having already a negative net positioning with 2K shorts added with the last report and 4.6K longs getting closed. Now, the NZD is already weak, which is exactly what we need in order to create this rejection to the upside. So what we need at this point is some accumulation of longs on the euro from an institutional perspective. If we will see that, there is a good probability that we will see this rejection to the upside. So how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we will have, and as we have right now, to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the upside for the completion of this impulse correction and impulse pattern to the upside. Now, if you do know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description, and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.